We start off this morning. Stocks are trading narrowly mixed in a narrow range, but still slightly volatile. Lots of interesting news out this morning, valuable stuff. I would highly recommend you stay to the end today because a lot of the really good stuff is at the end. I guess that's the only way I can say it. Let me start off with this, though. Jamie Dimon spooked the market a little while ago. Things were kind of going up in the pre-market, but Jamie Dimon kind of came in and messed that up. We'll have more about that in a minute. It may seem it's a safe bet for me, but given the recent volatility has been off the charts, I do expect less volatility today and going forward because the markets are going to be getting used to this new normal. The trade deals are going to take 90 days, maybe even longer, but I'm expecting that some of these trade deals will be announced, some of them fairly soon. Some of the ones that'll be less complicated will be announced just to get the headlines. The trade deal is going to take 90 days, which is actually Trump speed, because as pointed out by some pundits over the last couple of days, these would normally take months and months and months, but no, they're going to be done much more quickly in this environment. Of course, China is a super important trade partner, but actually, if you count the Eurozone as one trading partner, as opposed to counting all the countries individually, it turns out China would be fourth. Mexico number one, Canada number two, Eurozone number three, and China number four. But I think the China factor right now is completely baked in. So maybe not the worst case over the China trade war, but maybe pretty close. So what may not be baked in would be a recession, a true recession, but we won't know whether we're in a true recession for a very long time. I'll also make another crazy predictions. Bonds will rally and rally hard and soon, and gold will fall again and fall hard soon. Less so on gold than on bonds. Bonds should be right now, especially after the PPI this morning. Uh, uh, the 10-year bond should definitely be in the threes, but we're still sitting just under 4.5. I'm not as sure about the dollar, but there's a very good chance that the dollar is going to regain its strength. Certainly, as bond yields go down, that would tend to cause the dollar to go down. But I think that these things are kind of all they're not moving in the normal direction in terms of how markets usually move because of all the tariff confusion. So as the confusion gets less and less, or as it becomes less and less the story of the day, I think these things will return to more normalcy. That's just me. I could be completely wrong. It's not investment advice. This is a entertainment show. So to never ever make a bet on the markets based on my statements, take it for what it's worth, combine it with other information, then make your decision on your own, please. Anyway, Sawyer Merritt says this morning, here is everything that's new about the Cybertruck long-range rear-wheel drive. What has been lost versus the long-range trim. No, all-wheel drive trim. I'm sorry. So it's kind of a stripped down model, if you will. So far, I think it's only available in the Middle East. I'm not sure, but that's my understanding. No HEPA filter, no air suspension. That would be one of the more fun parts about the car. No rear light bar, standard bed with no tonneau cover. You can upgrade to a soft tonneau cover, which is something that's being talked about right now a lot. That costs $750 for the upgrade, and it increases the range to 363 miles from 350 miles. It will be textile seats, not the vegan leather. Headlights without the signature lamps. Standard bed lamps versus premium lights on the all-wheel drive. No L-track in the bed. What's an L-track? Oh, the L-track. Okay. No two no outlets in the bed. No heated rear seats and no ventilated front seats. Standard center console with no second row screen. 7 speaker audios versus 15 speakers. No active noise cancellation. No mechanical front locking diff due to only the single motor. Okay. Yeah, don't need the differential. Weighs less and also can tow less. Cybertruck uh, long range rear wheel drive deliveries begin in June, and the soft tonneaus begin shipping in June as well. Some pricing indicated maybe around 69,000, I think, for this. If I remember right, maybe it was 59,000. I'm sorry, but this was not part of this article. All I can tell you is you're going to buy the car for probably 20 years. I would not be interested in paying 10,000 less with all of this taken away. That's just me. This is from Go Banking Rates. I've never heard of this organization before, but I think this would be what they're stating here, at least, I think is not deniable. Unlike many stocks, there is anything but a consensus outlook on Tesla. When has there ever been a consensus outlook on Tesla? Here are the ratings 48 analysts currently have on Tesla, as reported by Yahoo Finance, and this would be coming down a little over the last couple of weeks. So strong buy, there's still 7, a buy 16, and a hold 14, underperform 9, and sell only 2. Actually, overall, that looks like that's pretty good, I think, overall. So you have 23 that are in a buy or strong buy and only 11 that are in a sell or underperform. All right. Meanwhile, 1-year price targets run from 120 to 550. I bet you if they work really hard, they could find Jordan, Gordon, is that his name? Gordon? Anyway, Johnson, I think he's at $7 or something. Anyway, but no, these are among these analysts that they actually think have anything to offer in value. 120 to 550, and then there's Randy. I'm at 700 plus. This is Randy Kirk, by the way. Oh yeah, I just said that. And you could like and subscribe and hit notify. That would be great. All those things would be great. They just help the channel. And I know some of you enjoy the channel and you feel like you get some value out of it. So providing it to others, giving this as a gift to the world, man. Whew. Yeah, I love selling, but man, that was a little strong. But okay, join Patreon, become a member here on YouTube. All good things. Barron's. Oh yeah, the member who joined Patreon yesterday, I sent a little note to him. I said, look, I'm not offering anything extra, anything special in Patreon right now. It's just, your offer, your decision to send me some money is 100% just out of just as a thank you, as a tip, if you will. I started out in life as a waiter, so I'm used to generating tips. It's just thanking me for the work that I do to bring you this news here and on X. Barron's data recently released from Cox Automotive's Kelley Blue Book has revealed that electric vehicles such as the Tesla Model Y and Model 3 saw an increase in their average transaction price in March of 2025. Their findings were shared in a press release. As noted by Cox, new electric vehicle prices in March were estimated to be $59,205, a 7% year-over-year increase. In February, new EV prices had an average TP and ATP of 57,015. The average transaction price for electric vehicles was 24.7% higher than the overall auto industry. As per Cox, compared to the all-over industry, I'm sorry, I don't know all these. The average incentive package for an EV was 13%. Down from a revised 14.3. So incentives were lower. The pricing was higher. That's good news for the BEV. And actually, I think that included some of the hybrids as well. Tesla while Tesla saw challenges in the first quarter due to its factories changeover to the new Model Y, the company's ATPs last month were estimated at 54,000, a year-over increase of 3.5. So that should actually bode well for the first quarter financials, and it's actually what AJ has been saying. JP Morgan Chase, Morgan Stanley, and Wells Fargo all responded. I'm sorry. I need to wipe the sleep out of my eyes here. JP Morgan Chase, Morgan Stanley, and Wells Fargo all reported that they had a first quarter earnings beats. All had solid results. Jamie Dimon of Chase and the Wells Fargo announcements both included concern about a slowing economy, and Wells report supported the tariff effort, but were hopeful of a quick resolution. Now, there's lots of panic around the 10-year bond right now at 4.45%. And while we've seen a major move, in other words, it's moved up from 3.9 to 4.5 in a week, which is crazy, I don't get the panic, even with this crazy move. Here are the possible reasons. I ferreted out so far. I asked Grok this morning. Grok didn't really add anything of interest in terms of this list of 4 that I came up with yesterday. Number 1, the market actually worried about inflation going to 3% or higher, even after the CPI yesterday and the PPI I'll report on in a minute from today was outstanding. So why would they think that inflation is going to 3% or higher, given that great news? Well, the tariffs, of course. But again, the tariffs, it looks like this is going to all be settling in the next 90 days, and it's only going to be China. And China is not, no matter what happens in China, it's not going to impact inflation that much. I'm sticking with my 0.8%, and I'm sticking with my sort of, what would you call it? My statement yesterday that this might be a good thing, the 0.8% increase in interest rates caused by the tariffs might be a good thing because with the Trump inflation going down right now so rapidly, we might be looking for ways to keep inflation more elevated towards the 2% that the Fed desires. Remember, in the first term, all the Fed talked about was we got to get back to 2%, and during Trump's first term. So this is looking like we're going back to Trump economics. Wait till you hear if you haven't heard the PPI numbers yet, you'll hear them in a minute. Number 2, China or Japan are selling even more bonds than usual. This seems likely, but also traders. Last night, we had a great conversation with Bradford Ferguson, who said they are selling bonds, and he thinks other traders are selling bonds, and they are doing for 2 reasons. One is to raise money so they can buy equities in this oversold market. People are just thinking this is the bottom, and so they want to get into the equities, so they're selling their bonds to do that. And they can always get back into bonds, or they're covering problems. Some of the hedge fund might have had calls, might have had some issues that they had to cover from this volatility over the last few days, so they're selling bonds in order to raise cash for that. And then buyers are on the sidelines and trying to get the top of the bond issues. So they're waiting. They're thinking, okay, maybe this is a big run up. So sometimes when there's a big run up, people are like, okay, see if I can buy this at the top. Well, this guy thinks we're probably at the top. I don't think China has enough power in selling bonds or Japan or any combination to jam the president. If that's what they're trying to do, if they're trying to jam the president right now, I don't think it's going to work. And I also think that they don't have enough power to do it because it's too good of a deal. There's so much money in the United States that they can pile into these bonds. If they start going up towards 5%, it just can't happen. That's how markets work. The current rate is not high at 4.4, whatever it is, just under 4.5. This current rate is not high by any standard, historic or current. So I don't get the panic. We're in a period of uncertainty. The President of the United States is attempting to completely disrupt a global trade approach that the world has taken for granted for 50 years at least. And this is certainly some of the reason for the dollar being down, gold being at all-time highs, and yields being as high as they are. But this creates three plays for those who are interested, who might be wanting to play for the first time, or maybe they commonly play in gold, currencies, and bonds. There are options available right now for people to take advantage of these crazy values. JP Morgan Chase, as I mentioned earlier, Jamie Dimon, he said Friday that he expects estimates for corporate earnings to fall amid the uncertainty created by President Donald Trump's trade negotiations. Analysts have generally reduced their S&P estimates earnings by 5%, he says, in recent days. Dimon said, I think you'll see that coming down even more. That spooked the markets, which had been higher in the pre-market, and they immediately reversed after Jamie Dimon said this. Jamie Dimon also said that he sees deals being pulled back. People hesitant to in the middle of deals are kind of putting them on pause for a minute, waiting for some of this to ferret out. Fair, reasonable. Definitely think that's happening. BlackRock, Larry Fink, told CNBC this morning after the Jamie Dimon report, he says the U.S. economy has weakened. I think we're very close, if not in a recession now, Fink said on Squawk on the Street. So thank you, guys, for finally catching up. I've been saying that the U.S. is headed for a recession for months now. Everybody else is saying, oh, no, it's going to be a great year. And I know I didn't have all this tariff nonsense to add to my analysis at that time, and the trade stuff is, when I say nonsense, I don't really mean nonsense. I think this is a very smart move, but I didn't have this information to add to my formula. My formula is the U.S. economy had to slow because of DOGE, because of the layoffs in the federal government, other impacts right now in the overall situation. I think it will, if we go into a full recession, it will be short, it'll be flat. It will not be a serious recession, but it will be a good thing for the economy. You have to have recessions. You've heard me say this before. You may not like it, but I'm telling you, after studying recessions for 35, 40 years, writing a book on recessions, I can tell you it is a good thing for economies to have recessions, even deep recessions, because sometimes the deep recessions are very V-shaped and we come out of them quickly. They are very good for cleaning out all the gunk and mess, and bad employees and bad companies, bad products all get taken out when you're in this kind of a situation. We're also going to have some losers. There are going to be some decent companies, some okay companies that are going to lose out because of what's happening with the trade tariffs and all the rest of the things that are going on with China. There's going to be some people that are going to lose. People are going to lose over the whole thing with DOGE and the U.S. government, reducing the total expenditures. But you need that. We need to stop that. And so these things are, people are going to lose. Guess what? There's going to be some huge winners on the other side of that trade, people that take advantage of the new direction in how things are going to be, both with the government and with international trade. Thank you. Oh, and with immigration and everything else. There's going to be some losers with regard to the immigration policies of the Trump administration, and there's going to be some winners. There's going to be some losers with regard to the way that we're pulling all these criminals out of the cities and sending them home or sending them away, and there's going to be some winners. So the key thing for an entrepreneur is to be quick on their feet and to figure out how to take advantage of the new normal. Fears of an economic slowdown have risen sharply since President Trump announced widespread tariffs last week, sparking a sell-off in the stock market. Trump on Wednesday announced that he has paused some of those import levies for 90 days, but that move is not enough to restore confidence, according to Fink. This is from BlackRock. Fink, I think you're going to see across the board just a slowdown until there's more certainty. And we now have a 90 days on the reciprocal tariffs. That means longer, more elevated uncertainty, but the uncertainty will continue to go down. So we're at max uncertainty. If you like Brian Wong's thing, we're at max bad news, max uncertainty. What do you think that means? If you like Brian Wong's analysis, that would say that the markets and Tesla should now begin to go up. It'll be choppy, very choppy. In another win for the Trump administration, the PPI goes negative, big time negative. First time it's been negative since June of last year. The producer price index for final demand decreased by 0.4% in March. Seasonally adjusted, the U.S. Bureau of Labor Statistics reported today. Final demand prices increased 0.1% in February and 0.6% in January, so down 0.4% in March. On an adjusted basis, the index for final demand advanced 2.7% for the 12 months ended in March, which was under expectations. In March, over 70% of the decrease in the index for final demand can be traced to prices for final demand goods, which fell 0.9%. The index for final demand services declined also, though, 0.2%. Prices for a final demand less foods, energy, and trades, in other words, okay, yeah, what's wrong with my brain? Anyway, it went up 0.1% in March after increasing 0.4% in each of the previous 3 months, dropped dramatically. The core dropped, went up only 0.1%. For the 12 months ended in March, the core index for final demand went up at the rate of 3.4%, coming down nicely. Wall Street Journal. In total, the U.S. bought $3.3 trillion worth of goods from countries around the world in 2024, which is about 14% of the economy. Goods from China represented 13.3% of total U.S. imports, making China the third largest supplier of goods to the U.S., unless you count, as I just mentioned, unless you count the Eurozone as one. That means that that's only 2% of GDP. 13% of 14% is 2%. So we're talking about less than 2%. Actually, you're talking about a very, very small percent of GDP. Products such as smartphones, computers, toys, and video game consoles accounted for 55% of the U.S. imports from China. So that was not, yeah, that would be what I was saying last night. It's all about, we did a full analysis last night. If you didn't see it, you need to see the Bradford Ferguson video we did last night. And we went through how it breaks down. And about half of all the stuff that comes in from China is, they didn't mention in that, would be TVs, smartphones, computers, and toys, video game consoles. So this is what we'd be losing out on. This is what's going to have to move to a different country unless this is solved. And I think it will be surprisingly easy even to bring some of that back to the United States. The toys, not so much. That's going to probably stay in Asia. But I think it's possible to move the computers, the smartphones, the televisions, etc., either to other countries around the world and or even back to the U.S. Bill Ackman, again, quoting Bill Ackman. I've had a lot of stuff from Bill Ackman lately, but he is one of the most successful hedge fund guys in the world. Investors and market commenters are reading too much into the short-term market movements in rates, currencies, and equities. Oh, really? Thank you, Bill Ackman. Thank you for... I believe that it's much more likely that recent sharp moves in these asset classes due to highly leveraged market participants being forced out of positions than due to any fundamentals. 100%, Bill. In other words, technical factors are driving the dramatic market moves. As a result, markets have become increasingly unreliable as short-term indicators of the impact of policy changes. I don't understand how it's good, he says, for the world to allow investors in equities to operate with 10-to-1 leverage and investors in treasuries and currencies to operate at 100-to-1 leverage. When did we decide as a society to abandon the margin rules that were put in place to protect markets from this kind of volatility? Yes, 100%, although I do take advantage of some of those with my leaps, huh? Okay, so let's go ahead and take a look at where we are right now. We have Tesla down almost 2%, call it 2%. We've got the Dow Jones down 0.33, the NASDAQ down 0.31, and S&P down 0.25. All of them, as I mentioned before, a little choppy. It wouldn't be at all surprising, again, to see this completely reverse in the next hour. But again, not like yesterday where it's moving at 2, 3, 4%, but moving in smaller again, Tesla at 2%, that's Monday. Apple is up, actually. Google is up, actually. Microsoft is up. NVIDIA is up. See what I'm saying? Amazon and Meta are down. So very choppy, very mixed. I think this is what we'll see most of the day, unless there's some news. The news from the major banks, the news from the PPI, the news from what was the other? Oh, and these quotes from Larry Fink and and diamond, these should be enough to create the news of the day. I mean, and this is where we are. This is the movement we're getting. Not very much, okay? And then you've got same thing with Cathie Woods. They are mixed as well. What isn't mixed is the bonds. So right now, let's see if this is current. Make sure that I'll refresh my screen here. Okay, same thing as it was earlier. We're up almost 15 basis points, almost 15 basis points on the 10-year. We are over 4.5 now at 4.541. I'm not going to say it again. Use that information to your benefit. The 2-year is up 7.9. The 2-month only up 0.6 of a basis point. So the concentration here is in the 10-year. For instance, the 20-year is sitting under 5%. I mean, it's almost 5%. What a deal. You can buy a bond right now that'll give you a guaranteed interest rate of 5% for 20 years. I don't know what to say. Okay, well, I do know what to say. I already said it. Okay, let's go on to oil. Oil is down 22 cents. We're still under $60 for Texas Intermediate. Brent is up the same amount, is sitting at 63.14. So yes, that would be just a little over $3. Difference between the two. Natural gas is at 3.491. That is up, I'm sorry, down 1.83, but still in that the normal range. Gold up 66.80. Gold is now at 3,244, another all-time high. Same advice, not investment advice, life advice. Sell your gold. Oh, silver up 2.86% this morning, but it's still fine. It's at $31.64. Okay, let me just say real quick about silver. Silver is not just a precious metal. Silver is something that's used in industry. So it is both a commodity and a precious metal. So it's a little harder to figure out how to play silver. But copper is also up 2.43% this morning, back to $4.44. The dollar is falling, it says here, except I'm looking at the euro. It looks like it's raising against the euro. Anyway, Bitcoin up 2,383 at 80, almost 82, 81,907. And that is what we have to report this morning. So later today, Larry Goldberg, yeah, I'm sure Larry will have plenty to say about what's going on today. And then I'm pretty sure I'm going to bring Brian Wong back tonight for the 7:45 version. And then for sure, I've got Phil Basel on tomorrow morning talking about FSD and Robotaxi. I have got definitely Brian Wong again over the weekend. And then lots and lots and lots of me, just me. Okay, so hit like, subscribe, and all that stuff. Yesterday night, Bradford Ferguson, you're going to want to check that out, as well as Sir Basher. I'll put both cards up for that because Bradford Ferguson had a ton to say about the way that he's been managing and making a ton of money over this week. And you'll want to see that if you didn't already see it. And then, of course, Sir Basher's always a ton of fun. And he talked a lot about tariffs, but also about Tesla specifically during these uncertain times. All right, so that's it. I'm going to say goodbye, and I'm also going to say it's been great talking to you.